Good morning, marketeers. Let's talk money. President Trump just added more heat to the trade war, announcing a new 25% tariff on all foreign-made vehicles. Whether it's your dream European car or your mom's old Honda, expect prices to rise. The message is clear: build it in America or pay the price. Meanwhile, consumer expectations are sending mixed signals. The University of Michigan's Consumer Sentiment Survey shows people still expect inflation to stay high into 2025. Current inflation sits at 2.8%, but investors are betting on a 2.2% average over the next 5 years. A Fed official warned that rising long-term bond rates could signal economic trouble. Why? Because higher borrowing costs can stall spending and slow growth. And the student loan crisis is making headlines again. Since payments resumed in 2023, about 9.7 million borrowers have already fallen behind. That's over $250 billion in overdue loans. Beyond hurting credit scores, this trend could drag down consumer spending and signal a broader economic slowdown. Now to the markets. The Dow slipped 0.31%, the S&P lost 1.12%, and the Nasdaq fell over 2%. Tech took a hit, but there were some standout moves. Amazon is getting some love from analysts who say it may be undervalued compared to peers like Nvidia and Apple. It's trading at a lower price-to-sales ratio, which could be a sign of potential, or lower future growth expectations. And over at OpenAI, the company expects to triple revenue this year to $12.7 billion, showing AI is still a money magnet. Dollar Tree also made waves by dumping Family Dollar for just $1 billion. They originally bought it for $9 billion. Investors cheered the move, and Dollar Tree stock rose more than 3%. Over in real estate, mortgage rates are trending up again. The 30-year is sitting at 6.80%, and the 15-year at 6.22%. And for first-time buyers, the road just got rougher. The Federal Housing Finance Agency is rolling back programs that helped buyers with low credit scores and small down payments. The goal is to reduce risk in the housing market, but it could shut out many hopeful homeowners. One more housing twist. A California city is now the first in the nation to ban digital coupons in stores. So next time you're stuck in line behind someone fumbling with a rewards app, maybe remember, there's a city where that's illegal. Globally, Nvidia is facing pressure from China's new energy rules. Their top-selling chips no longer qualify under these regulations, and China makes up 13% of Nvidia's sales. That could hurt demand and revenue. Meanwhile, Swiss bank UBS is facing scrutiny after merging with Credit Suisse. Regulators are worried the combined bank may be too big to bail out in a crisis. UBS is offering to shrink its riskier investment banking arm, but the Swiss government isn't buying it. A vote is expected in May. In crypto, Bitcoin is hovering around $87,000, Ethereum at $2,006, and XRP at $2.38. The big news? Fidelity is entering the stablecoin space with a new digital coin backed by its treasury fund. Stablecoins are designed to be less volatile, making them better for transactions. And in a fun twist, a British bank just proposed replacing Tesla with Bitcoin in the Magnificent Seven tech lineup. Their new model, dubbed Mag7B, reportedly outperformed the original. The argument? Bitcoin behaves more like a tech stock than digital gold, at least for now. That's your market rundown for Wednesday, March 27th. Like and follow for more smart money news. See you tomorrow.